Coming to you from the floor of the CME Group, I'm Eric Wolfman Wilkinson. Let's get in the zone, the cash money zone. It's a Wolfman week is what it's turning out to be. It's Thursday, May 3rd. There's a lot going on in here. Yesterday when we were talking, corn futures and actually the whole grain room in general was starting to see a little bit of support coming in here. But then all of a sudden rumors started flying around down here that the CME was going to raise margin requirements up to upwards of 30%. What does that do? Well, a lot of these traders down here basically have positions and they margin themselves out. So they basically take all the margin that they have, they put a position against it. So what happens is when they start raising these margins, if that happens, these guys will be on margin call. So what they do is they start dumping their positions. That's what we saw yesterday. It took took the soybeans that were in positive territory by about 10 cents. By the end of the day, they were down 20. Corn fell out of bed also. They were down 15, and at one point in time, 20 cents on the day. So all of these traders started covering. Today we're starting to see a little bit of support come back into the market, except for in the soybeans. They're starting to come back a little bit. Well, that Sarkozy-Holland debate last night was pretty big. Sarkozy was trying to throw lefts and rights at Holland, calling him a liar, slanderer, socialist, whatnot, but really didn't really set the tone other than just kind of calling names back and forth. He really didn't give him anywhere in the polls. Now we're coming on to today. We got Draghi talking. We thought the ECB might lower rates. They held him firm. He was a little bit more hawkish than what people thought, so really caused the equities to fall out of bed. They were into positive territory, fell down, even despite the non-manufacturing ISM number. It came out a little bit better than expected, or actually it was a little bit worse than expected, but the one shining thing was that the prices paid came out a little bit better than expected. That was what really kind of held buoyancy on this stock market sell-off. People sold off on the initial headlines, dove into the numbers, saw prices paid kind of ebbed a little bit. It did come in above 50, which still shows expansion in the economy. But like I said, we're not going to see any spectacular numbers coming out. I think we're going to see these humdum, lackluster numbers continue to come out, and I don't think you're going to see the economy really firing on all cylinders anytime soon. And like I said at the beginning of the year, you're going to kind of see this trough line in the S&Ps. We haven't really broken above that 1425 area. We tested it once or twice, but for the most part, we're hanging around this 1400 area and just recently slipped into negative territory. But that's about all I got. If you can't take that, Coffee doesn't want me to break his lenses anymore. Take it easy.
Hashtag Billy Hayes here. Don't forget to sign up for that Option Monster Conference on June 2nd. Hashtag.